Well, as promised now, let's get back to the markets full throttle. Madhu Kela is now joining us. Nice introduction. He's founder at MK Ventures. Madhu, good morning. Great to have you with us here on CNBC TV18 on this, what we're calling it Super Monday, Madhu. It's going to be a Super Monday and hopefully, super next many months. But let's just begin by getting your thoughts on this, on the sweep that we saw the BJP sort of doing in 3 states. And Madhya Pradesh, it's significant after 18 years to come back the way they did. It's just quite something. Your initial thoughts?
So, Prashant, first of all, thank you so much for having me. I think these are the times which we have been dreaming for the last 30 years. And being bullish in India has really, really paid off. I can tell you with personal experience. So there are 3 things, Prashant. One, I think this event to an extent was not anticipated the way it came. Even none of the exit polls, none of the surveys could project this kind of win. So to this extent, I think it's a from a market perspective, it's a positive thing. Second, to my mind, it truly validates the good work which the current government has been doing for 8-9 years. And I think this kind of mandate, will push the development and inclusive agenda much further, going forward. So which is a very, very good thing from a market perspective. Third, Prashant, I think with this in the bag, now 2024 election, will look much, much more certain than it has ever looked in the past that, the current government will come back. And the focus of the government over the last 10 years was, to clean up a lot of things. So next 5 years will truly, truly focus on the growth. I would go little further in saying that, while we talk about next 25 years of amrit kaal, so to my mind, next 5 years from a stock market perspective will be the real amrit kaal, post 2024 elections. And we're starting now because, now there is a much, much more certainty. So next few years, Prashant, are really, really going to be very good for India.
Madhu, so are you saying that from here going into the elections, right? Because the outcome, nobody really doubted that mishap in 2024, but the outcome of these state elections, as you said, has made it much more surer in that sense.
Exactly, so, it makes it much, much more certain, right? Otherwise that always the lingering thing was there. We don't know, right? Even though there is certainty, but this makes it much, much more certain.
Right. So what should we expect for markets? Today we will get a big gap up. If you want to comment, because the market did rally 500 points coming into this over the last 4 days, and we'll get a 250, 300 point gap up. It's going to be a big day. But then, more importantly, from here all the way into elections, should we expect something like what we saw in 2014? Rally back then started in October of 2013, but it was very different circumstances. The rupee was, if you remember, down in the dumps, and it was looking very, the mood was one of despair, which is not the situation right now. Can we have a rally going into 2024 elections, a meaningful rally?
Prashant, I don't know what you call meaningful. From my perspective, it is not a month-to-month thing. Trust me. I think, I would like you to run through to your viewers what happens to any company once it hits a lifetime high, right? So here the whole market has hit lifetime high, and it has consolidated now for a real big period of time. So now, to my mind, what is really important is what is the, let's say, worst case downside. So we had 18,600 where the market really spent a lot of time, and after it has taken out with a force, and it has stayed here for a long period of time. So Prashant, I think, we are in for a couple of years of very, very good markets. Now, within this, whether you will have a 500-point rally or 200-point rally, or you will have a 200, 500-point decline, that I'm unable to comment. But what I can clearly see it's a phenomenal time for equity investors. The other point which I would like to mention, see, what is the biggest worry in the market is valuation, right? This is what is holding up people, that the valuations have become too expensive. There, I would like to comment on two things, Prashant. One, that yes, valuations are higher than what they have been historically so. But we should not miss a picture that the interest rates are stable, the growth is far more stable, the inflation is far more stable. So obviously, in these kind of scenarios, when there is no volatility in all of that, it will clearly lead to higher valuation. Second, very important point is that there is a certainty of earning. So yes, if you look at it, valuation from a next 12-month perspective, they may look expensive, but there are people who are willing to have a 3-year, 4-year view. So with this certainty of earning in a lot of companies, if you take a 3-4 year view, then the valuations are not looking all that expensive.
Stretched. Okay. Madhu, hi, good morning. This is Sonia here. So, you put some very important points on the table. I just wanted to do a follow-up on that. Everyone talks about how this is a resemblance of the 2003 to 2008 phase. If this genuinely is that kind of a bull run, at what stage of that phase are we in right now? And how do investors approach it? Do you look at domestic consumption? Do you look at capital goods, the spaces that have not worked in a very long time? What's the approach now?
Yeah. So good morning, Sonia. Again, good to be here and interacting with you guys on such an important day. I would say that as my mentor Rakesh Bhaiya used to say, it is like a buffet. You eat what you want to. Just remember, you don't end up overeating, right? So I think there are lots of good pockets from an investment perspective, but with full disclosure, and this is just, everyone who is listening to me should do his own homework before investing. But I would say the financial space looks very compelling to me from here on a risk-reward basis, because these stocks have not participated in the last 12-18 months meaningfully. So there has been a lot of consolidation while the earnings are kept up. Here, there is a lot of valuation comfort which we have, and I would go so far saying that we have always liked public sector banks over private sector banks, but now on the bet is the mix of public sector and also some private sector banks which have consolidated beautifully. And I would think that one thing which the market is really missing as of today is the FII flow. With this certainty of election results, I wouldn't be surprised that the FII flows over the next few months really gets resumed. And when that money comes in, it will only go into large liquid companies. And I think banks will be on the forefront of recipient of this kind of liquidity from the foreigners.
Hi, Madhu. Good morning. Always good to see you in. And in fact, remembering the great man as well, Rakesh Jhunjhunwala, I remember a couple of years ago, he was saying Nifty could be at 1 lakh by 2030. Maybe that could be on the cards as well. So things are looking up for the Indian markets. But Madhu, you're making a very good point on these PSU banking names. And you were early in on some of those names and they've done well. But now you're saying maybe you could balance it out with some private sector banks as well. Let's talk about government themes that have actually done well. But how much more can they do? With the BJP almost certainly to come back to power in 2024, this capex spend theme is going to get a booster shot. Some of the stocks have already rallied big time. How would you approach it? Because in select companies have already participated, but they've already doubled or tripled. So your take out there.
So Nigel, again, good morning. Thank you for having me. I would say, Nigel, clearly PSUs are the leader of this bull run. We did some number crunching. In the last 3 years, PSU overall market cap, which was roughly 14 lakh crores, have surpassed 45 lakh crores, right? So on the whole, there is a 30 lakh crore rupees of value creation, which has happened in the PSU stocks in the last 3 years since the bottom of markets happened. So clearly there is leadership. When the whole sector has gone up 3x, you can imagine there are a lot of companies which would have gone up, 5, 7, 8, 10x as well. So I think this market is clearly led by PSU as a theme. And we have been in the forefront. We have spoken many times about this theme. Second thing I would say, Nigel, is that, with this certainty of government at the center, given that it will last for many years, even beyond 2024, clearly, yeah, I think PSU stocks will gain out of that stability at the center. And if I look at valuation, Nigel, even though stock prices have gone up, but the valuations are not expensive. Let's just talk about, some PSU banks without getting into specific names also. I would say some of the banks, even large banks, even today, are trading at 4 and 5 P multiple on 2025-26 earning. I am talking about large banks. Now, the people who have missed out this rally, they are still believing that the PSUs are inefficient and they will, there is corruption and there is this and there is that. वो अंगूर खट्टे होते हैं, ये वो वाली बात है. People, if they want to go and visit what some of these PSU banks have done on hiring, on technology, on retail distribution, it is a delight to see the kind of work which has happened in the last 5-7 years in this sector. Now, they are also at 17-18% ROE. They are also 1% ROA. How can you justify these companies trading at 4 or 5 P multiple when the market as a whole is trading at 18-20 P multiple?
Absolutely. Well said. 30 lakh crores from the bottom 3 years ago is the market cap accretion across PSU names, across PSU stocks, as you put it. Madhu, financials, PSUs, mix of some large private banks, etc., also in favor now. What else do you think? PSUs are the clear leaders, but what else? As you said, it's a buffet.
Yeah, clearly Prashant, one more thing which we have discussed many times in the past, where I don't think market is even now recognizing, even though the stock prices have moved up somewhat, are the infrastructure companies. Again, if you look at the order book of a lot of these infra companies, if you look at their performance in the last 2 quarters, if you look at the quality of balance sheet which is getting built up, and in my mind, with this certainty, again, that this good work will continue for the next few years, if not more. At least I can see visibility of that kind of time frame. I think these stocks are still trading at very, very compelling valuation. Some of the companies which we own and which we track very, 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 very closely, they are still trading at below 10 PE multiple on a 2-year forward earning basis. And when I look at even the ownership is not here. I have not seen too many brokerage reports thumping the table and buy on this sector. And there is a lot to choose here. And some of the companies are quite compelling, I would say.
I just have one final question. There was a point that a guest was making earlier, saying that India has 2 things compared to China, which I think, makes the argument for India stronger. One is a very young demographic, and 2 is sectors like real estate are picking up in a big way, which is not the case in China, right? China is seeing a big debacle there. Do you think these 2 things, along with others, could lead to more money being pumped into India compared to a market like China over the next 12 to 18 months?
Sonia, at least I don't have any doubt in my mind. I'm sure you are also smiling and you have no doubt, even though you are asking this question. I would say the flows, trust my friend, trust me, it is going to surprise all of us on the upside. And we have not yet considered the debt flows, with the inclusion of JP Morgan bond index and many indices which have not yet included India on the bond side. I wouldn't be surprised if the flows really surprise the way markets have got surprised by this election victory in the last in 3 states. I wouldn't be surprised if the flow surprises the market in the similar manner over the next 2 years.
Madhu, just one last question. In terms of fresh reform impetus, this PLI schemes, etc., have been big wealth creators, right, across sectors. Would it still be focused on building out infrastructure, manufacturing, budget after budget for the last 3-4 years? That's where the big allocation has gone. So the thrust will be still that, in your assessment, briefly?
Yeah, I see no reason to deviate from there, Prashant. If you look at, in spite of whatever is being spoken, the government is really on a path where they are still in a physically very, very strong situation, and they are in they're going to get into a stronger position. You look at the tax collection, you look at the GST collection. So I think the capital formation model and the capital expenditure model, which is there in the budget, it is here to stay. And clearly this verdict which has come even for BJP as a party is clear validation of the good work which is happening. It is clear validation of the feel good which is there in the country. So I see no reason why the government should deviate from here. In fact, in times to come, it is going to get even more stronger than what we have experienced in the 5 years.
All right, Madhu, we'll leave it there. It's a great conversation on an important day, as you said. Thank you so much for being with us here on CNBC-TV18 first thing in the morning. Thanks indeed.
Thank you so much for having me. Thank you so much. All the best. God.
Thank you.